is the 17th day of September 2025, and the time of this recording is 4:49 a.m. The market is about to open, but today is a very special day because what is going to happen is that we will have a decision as to the rate cut. So this decision is going to be done by the Fed, and if it is positive, then we can expect the market volatility to decrease to a degree, but we expect also the stocks to spike, especially the ones which are heavily dependent on what we call interest rate. So those companies will see a push in their share prices. It doesn't necessarily mean that the company is now more valuable. All it means is that the market believes that based on the new dynamics of the environment, the company will be in a position to be more profitable, and the stock market generally calculates in things which are to come. It is a forward predictor. That is the nature of the stock market. So today I just want to give you a brief overview, a midweek overview as to what it is that our portfolio is currently standing at. So let us open our Webull account so that you can get a visual as to where we are as of this day. So let us go into our account and let us open our Webull account. So this is our Webull account. Let's enter our information. So as you can see, before the market is open, the pre-market, we are at $8,061.60. That is where we are currently. In our cash account, we are at $7,996.43. And I want you to realize that we have some positions open which you can visualize on the screen, which are our same positions that we are holding for 2026 and 2027. The 2025 position for September 19th, we want to close them today, providing that the market responds favorable. Then these should have a high level of implied volatility to them, which would cause them to increase in value, and then we'll just clear them from our portfolio today. All right, or if not today, tomorrow, based on the reaction of the market. If not, they may expire worthless, and we would have secured a loss for this position. But that is another situation that we're not too concerned about, this minor loss, because all of these losses will be harvested and they will be used to reduce our net income in the future, because the government allows for you to depreciate or reduce based on your tax, your stock losses. I think about $3,000, but I'll have to verify to make sure that that information is accurate as to the time of this recording. So it is 3,000 plus or minus thereabout that you are able to write off in losses on your taxes, which means that you should be taking at least 3,000 worth of risk, because that loss can be written off and future dated. But currently, the amount of losses that we have incurred, we have more than enough tax losses to take us for the next 15 to 20 years. But that there is another situation that there is for taxation purposes, but I am teaching you so that you can position yourself, so that you can take advantage of that which you have been gifted. All right, so this is just our standing offer account. What we expect is that if the market operates favorably, we are expecting that this $7,996.44 should go to 10,000. That's what we're expecting, the initial spike, the initial pump. But if it does not take it favorably, we're expecting the market to come down. So this $8,000 or 7,994 will come down to about $5,000. That's what we are expecting. That's the range of movement that we are expecting for this position. And the market can do what it feels that is best based on the information that it has, but we will not know until the final sound of the bell. So that is just what we are going to have to wait on to ensure that we are in the right position at the right time to get the best reward for our efforts. And as you know that we had taken a speculative position in our ROT account, and if losses are incurred, then that's a small loss. We're going to replenish this account in the near future, so that is negligible. All right, this was our $100 account, and we're now down to $65.17. But we actually want the market initially to spike up, and then after it spike up, we close our position, and then we allow it to come back down to reality. And then what we're going to be doing is redeploying those capitals into positions for 2028 or 2027, wherever we see a gap in the spread. All right, so that is just our direction or mode of operation that we have intended. So this is our Webull account. Let us see if we can go into the Moomooo account and see what the Moomooo account is telling us. So based on what we are observing is that our account balance is sitting at $7,162.78. And I just want you to remember that in this account we have not added any more money except the initial capital of 1,000, which we added to our margin account in one go. However, in the cash account, we gradually added about $900 in that account. And we found out that it is better to have a greater sum, a substantial sum, and you deploy it one time in your primary conviction when the opportunity is presented to you, because you are in a position to get the best return on your investment. When you do it incrementally, you will get returns on your investment, yes. However, because of the time delay and the gaps, you may not get the best or the most ideal entry. So if you have the cash sitting down, then you can take advantage of proper timing and position. But if you're not into time and timing, then you just get into the position and sit, wait, and if they're in your favor, you continue to add to it. If you're not in your favor, then you cut it and you remove it. It is as simple as that. And that is just something that we can experience and we can facilitate. And if you are into this kind of a realm, this kind of dynamics, then you can enjoy the fruits of your labor. So the company that I want to remind you that is undervalued, there are a few, but the one that I want to remind you that is undervalued, that we believe that if you have only one company, you're an expert in one company, you can become a millionaire. Yes, we said that. You can become a millionaire if you're an expert in even one company. But the question is, do you want to be an expert in one company? It is up to you. If you want to diversify in or diversification basically is a state in which we are unsure of the future, so we put things in different baskets, spreading ourselves thin, hoping for the best result. But in most instances, we do not receive the best result. So, what I want you to do is to think about being a specialist before you be a generalist. All right, so specialize in one area, understand one company, and then if you are convicted with that company, you work with that company, and then you move on to bigger and better things. All right, so in this account we have the Webull account. We have uh, uh, approximately 5,800 plus 1,000, that is 600, that we have 5 6, that's about $7,000 we have in this account as well. But this account we never added anymore after we had done our first initial set of investments. All right, and the this is the Moomooo. So the Webull account we have been continually adding. We're doing in the same manner that a regular person would actually be doing it. When you get paid or when you have funds available, then you will invest or you put money towards your future. That's how regular people do it. If you don't have the lump sum or you don't have a small capital to begin with your initial investment, but it doesn't matter where you are. If you have time, then time will be your best friend. If you are almost out of time, then we're going to just have to expedite matters and move with as much expediency as is possible. All right, so what we're seeing is that please be advised that the following option in your account will expire soon. For long position, if your options are in the money, we will automatically exercise them for for you at expiration. Please make sure you have sufficient equity or funds in your account to support this exercise. You can also close your option position price to expiration. For short position in, at, or near the money, you are very likely to be assigned and are obligated to purchase or deliver underlying securities at the strike price. He says, please make sure you have sufficient buying power or equity to meet the obligation. So basically, it is just giving us a message to indicate to us that, hey, you have options which are coming due, and guess what? It will be time for you to pay the piper. But you have to decide what is in your best interest. So this is just an update as to where we are currently, and I want to also give you a big screen view as to what it actually looks like on the desktop version of Webull. The Webull and the mobile app, they basically have a similar uh, appearance. So what we're going to be doing is giving you a view as to what it looks like. All right, so this is us in the Webull app. Let's see. So we're just gonna click X. So the first thing that we want to do is to enter our trade information, and this pulls up our account. So right off the bat, we're seeing where our account is. So this is our account as it appears on the big screen. So you can see exactly what it is that we are positioned in. I prefer to use it on the big screen. I usually use the telephone or the mobile device to teach. It's because most persons tend to use their mobile device. But for me personally, I do execute very rapidly from my phone, but I really like to study the charts, the patterns, and the analysis from the computer screen, which gives you a better view and a wider landscape to appreciate what is happening. All right. So now the market is about waking up at 5:04 a.m. And that is why we have the total asset value increasing and decreasing. And this is the asset value for the stock position that we have. The options that we have open, they are not active until the market is actually open. So you are buying time for an execution, and you're also buying time for liquidation. So you have to just know the principles that apply to the different strategies. And when you're engaging in option trading, you have to understand that with great rewards, with great increases, comes great risk. And you have to understand your risk threshold, your risk tolerance, and your risk profile in order to select what strategy is best for you. So the strategy that we're doing, we are being a regular person with a regular job who is very busy and don't have time to be constantly trading, because trading is like another job. So what we're doing is just positioning yourselves in a better position than your investment advisor would position you. If you have a small capital, you may not even be able to have a real investment advisor. So that is how we are scoping our mode of operation. This is just for regular people, all right? Because when you have your first million, our strategy, our mode of operation will become more grand. Let's just leave it at that. And when we get to that point, I will show you a few of the strategies that I perform in my bigger accounts, so as you can have an appreciation that at different levels you're going to realize that the less money that you have, the harder you have to work. The more money you have, the less you have to work. And it's going to click as soon as we get to $1 million. You're going to say, how did I manage not having $1 million before? And then when we get to $1 million, you're going to say, but I just realized that I was living below my potential, my capacity. And when you realize that, then we're going to be having more desire to move on, to improve on our craft, on our skills, and move into the $10 million category. And when we're in the $10 million category, then we are in a comfortable place where we can take care of ourselves if things should go south. All right. But we're going to take it step by step. So within 5 years, 5 years, even though I'm saying 5 years, it should take us less than 5 years. But I just want you to have a realistic expectation, even if things don't pan out or we plan them to pan out, then you still have time on your hands, all right? But 5 years is the timeline that we're working with, even though, as we said before, we may more than likely reach that, because we have a vast set of knowledge, we have a vast set of experience in this market. But if you're really serious, then you can just follow exactly what we're doing. I'm not telling you to do what we're doing. It is up to you. But if you want to wait 5 years to see if it is true, then you can do that. We are not giving you any investment advice. I am not your investment advisor. I will not be taking that responsibility. But you are the CEO of your portfolio. And because you're the CEO of your portfolio, you have to listen to what others are saying, research, read, and then you decide what is in your best interest. So that there is just something that I want you to bear in mind. Now let us get back into the account status. It is telling us that we have settled cash $3,350. This is cash that we have to be deployed, but we have not yet executed deployment of that cash. And that cash is because we're trying to buy $40 strike price calls at 73 cents. However, they're going at 178 cents. All right, that is the bid, this is the middle, and this is the ask. All right, so if we refresh it, we can see, and then when we go over it, we can see the bid, ask, mid, and the percentage change, which is 4%, and the implied volatility is 63.35%. The delta is 28, which means that there's a 28% probability of this reaching the price that has been indicated. And the theta basically is a theta decay, because there's a thing about options that you have to understand. If you are a buyer of the option, time is not necessarily your best friend in the short term, because there is a great decay that occurs. So whether the stock moves or it doesn't move, you start losing value based on the theta, which is the time decay. All right, that is why futures is a little bit better, because you don't have what we experience as theta decay. So you would be in a better position to hold a position out to the end, and you still retain the same value that you had initially. But with the options, that is not the case. As time progresses, the option lose value, and most time the options, if you're the buyer, expires worthless for the shorter term option, because you have to know something that others don't yet know in order to execute on options that can move very rapidly in a short period of time. So that there is just something. But if you have information, if you know of a contract that is coming out, if you are a forerunner based on information that is available, then you can go ahead and place your position with the expectancy that the market will know at the right time, but you'd have already been in position to receive the benefits of your previous knowledge or your foreknowledge. All right, so that is just something that I want you to realize. So the components include the trading, the fees, and other charges, dividends. We're not in a dividend split, margin, interest. We have a margin account, but we don't actually use margin in our trading activity. Interest income, this is the money that incur interest in the account over time, and that is just money that is just sitting in the account, and it tells us how much interest we got and what we got them for. We got them for stock lending. This is for stock lending income. So you also can get interest on the money you have sitting in your account, but that was not for this one, or this 2 cents was not for that one. All right, so let us see 3 months, 5 days, year to date. Okay, 2 cents. All right, no problem. So that there is platform rewards. That is if you get rewards in your platform, if you do promotions and stuff like that, you can get rewarded. So those are some stuff that you can look at. So this view gives you a broader perspective. You have your watch list here, so you can put what you're watching. You're watching Apple, not particularly. Let me just remove Apple. Apple is not really my cup of tea. Let's see if we can remove it. Delete. All right. Apple is not my cup of tea. Apple is a nice company, yes, if you are already established. If you are not yet established, then Apple may not be the best option for you. Apple is a company that you put your money in and you expect it to retain its value, but it will not give you the exponential growth as a small cap will give you, or the technology companies would give you. All right, so you just have to know what your threshold is, what your time horizon is, and how you want to move, all right, and what risk you want to take. So this here is a stock scanner, so you can scan different stocks based on what it is that you are looking for. I tend not to use it, but if you have time, you can use it. And then this now is the setup for your customization. If you want to have multiple chart view, options, scanner, ladder, whatever it is that you want, this is how the platform is. Then this takes us right back to our account. We're seeing settled cash, unsettled cash, stocks position, we are up $43. Option position, we're up $1,100.70. And you can see the graph movement. We were up, we were down, we were up, we were down, we were all around. All right, so all time, let's see how this graph has been. Basically, it has been going straight up. All right, so we're expecting this graph to be at about 5,000 based on the profits that we are expecting in the next 30 days. It's now at 2,500. We are expecting that it should be doubled by then. All right, and the funds that we have sitting idle, we have intention to put them to good work. All right, so one thing that I want to do, I want to add some value to you. So what I'm going to do, I'm going to open, let's go back into the account. All right, so what I'm going to do, I'm going to open a position and just show you what it is that you should be doing. All right, so first thing that we want to look at is the chart. We want to have the chart already established, and this here is telling us what is happening. And if you click on the different areas, it tells you what is happening. So this is saying that input parameter for indicator CCI will temporarily be reset if you check the technical signal. Okay, got it. All right, so these are just telling you this is a hanging man, which means that this could fall. All right, so if you don't know what a hanging man is, you can always click on a hanging man and it will give you more information. This is in the short term. All right, so when you click on hanging man, Webull will come up and say hanging man implication. The hanging man is a bearish signal that the prior uptrend is about to end and may reverse to a downward or move sideways. This pattern is an indicator of a financial instrument's short-term outlook. So if you're a short-term trader, then this would be good for you. But if you are more long-term, then you don't have to worry about it. So whatever it is that you want to know, you just click on it and it will tell you what it is. And when you already set up your graph, it tells you what it is that you're looking at, and it tells you the positions that you're trying to get, you take profit, you're trying to get what you're trying to get out of, and all those kind of stuff. So it is a sweet setup. All right, so the next thing that I want you to do is to consider this. If you don't have a lot of time or you don't have a lot of money at this juncture, what I want you to do is to go to 2028 and select the strike price of 40. All right, and what you're going to do, if you have $1,000 to spare, I want you to take at least 2 contracts at 500, which is $5. All right, and then you're just going to place that order, and that is going to be a limit order. So if the market falls to 500, then I would suggest that you buy this position. That is just your starting position. All right, you could take it at 600 if you are impatient, If you don't want to miss the run up, then you could go for it at the price that it's currently at, which is reasonably priced. However, if you want to get the best return on your initial investment, then the lower the price, the better, so that you can get the increase as exponentially as it comes. In 2025, we're expecting that SoFi should reach at least $30, right? From 30 to 60, that there is a double up. That can happen in 2027, which means that the $40 strike price that we are looking at right here, based on our fundamental analysis, would indicate that at $40, SoFi would still be a good buy. If it hits your target before the time and you say, I have made enough money, I want to come out, then you are free to come out at any time. All right? But you must be mindful that if it goes down to $100, you should be willing to buy. Because if it goes down to 100, we are loading the boat on it. Because we know, not with absolute certainty, but we know that in the current pricing scheme of things, SoFi is undervalued. So that there is just one play that I'm giving to you. If you say that you don't have $500 or even $1,000 and you want something sooner, you want to see if this will really work, let me tell you what you're going to do. You're going to go to January 2026. All right? And say you have 250. I want you to come right here and select two, at least two. The reason why I want to select two is because if we select one, in order to take profit, we have to sell. And if you're up 100% on your position and you sell, you're not going to be able to get the rest of the ride, provided that it continues upward. All right, so there is that caveat. If you can only afford one and you want to try it, then you can consider that option play. There are many option plays that you could consider. Most persons will tell you that don't pick anything that is less than 80 delta. 80 delta is good. It's absolutely phenomenal. But guess what? That there is deep in the money. You would have to already have capital that heavy to go into the 70 or 80 delta. All right, they are good positions, but that is how you play it when you already have money. If you don't have money and you need to get money in terms of getting momentum, then you're going to have to go a little bit below the 80 delta. All right, but I don't want you to go too far below the 40 delta, because the 40 delta is our cutoff point. So that is the worst position that you should really and truly be getting into. All right, so if you can be in 80 and above, that is ideal. 70 is okay. 40, worst case. All right, so just remember that. I know that if you're looking at this, you're seeing this at 50 delta. Are we at the right place? 50, 0.55, that's 55 delta. That there is okay. Don't worry about it. This play has a high probability of reaching where it should be. All right, so don't worry about it. But what we want to happen is that the market should spike. If the market spike, you won't be getting that play at that price, because as the price increases, these will increase exponentially in relation to the price and the volatility in the market. So with the changing environment, then you can expect an upward trajectory on this play. All right, so that is just one company. So if you want to be an expert in this, I want you to study this company and see if this company makes sense. There's another company that I want to put on your radar. It is BBAI. This here is a more speculative play but it is giving us a good signal that it wants to go up. All right, the last report was not great, but even though it was not great, I think that if you position yourself for the future, say you put 250 in this, and you're saying that, hey, I believe that in 2028 this should be at $10. If this is not at $10 in 2028, then this company has not been doing a good job. So I want you to just think about that, and then you come to your conclusion to say if this makes sense. All right. So that is just another play that I want you to continue to keep on your radar. Another one I want to make mention of is APLD. So I have been calling this one out since it was at $6 because I saw the setup that was taking place right here. We were calling it out from about $6 that, hey, it was getting ready to make a move based on the pattern, and so said, so done. Spiked, and it's on an upward trajectory. I can't tell you when to buy this stock, but you are the CEO of your portfolio, so you will have to decide when is the right time for you to make a purchase. So if you look out on the chart, you'll see how this stock has been moving exponentially. So these are the places that you'd like to catch it. $3, $3.40, even at $1.70. If you had caught it in 2022 at about 85 cents, and you took maybe put $10,000 in that, you'd be in a great position. You'd be in a great position. So this is what you have to do. You have to understand how much capital you have, understand your time horizon, and then deploy it accordingly. You don't really necessarily want to get into the big companies all the time. And the reason for that is that many persons are expert in the big companies like Apple's expert. People are just study Apple, just trade Apple, and just make money from that one company. Tesla, that's another company that people just study it alone. They are expert, they are specialists in that one company. So you have to get into a game. You have to understand, find things that are undervalued, underappreciated, that has potential, and then move forward with your investment into those. Most of the companies that invest on people's behalf, they cannot touch things under a certain price, like about $20. Most of them cannot touch them. All right, they have to wait until they are profitable. Yes, you heard that. So you have an advantage. You can see a company that is unprofitable but has given you a roadmap to profitability. And if that is the case, then you can go with that company. All right. So there are many ways to skin a cat. You have to decide which way you're going to skin that cat. So I hope that this information was insightful and edifying. I can only show you what I've seen, but at the end of the day, you have to make the play. Have yourself a money-filled day. Until we meet again. Does it make dollars or does it make sense? I don't want in 2028 you come and say, hey, I'm not a millionaire. That there would not be my responsibility. That there is your responsibility to be the millionaire you were meant to be. Be blessed.